Our next panel is called Bitcoin Season 2, Building on Bitcoin, and this will actually be very interesting since, of course, most of us think about Bitcoin in terms of store of value and means of payment. So I'd like to welcome the panel, moderated today by CVA board member Jérôme Bailly, and he'll introduce our guests today.
Very cool.
Okay, have a seat.
Cool.
Okay, hi everybody. So I was looking for a way to transition from SNB to Bitcoin, but I had the question already, so thanks for that. But today we won't speak about the monetary aspect of Bitcoin, the one that you probably all know. We'll talk about the expressivity of Bitcoin. So we've called our panel the Season 2. Bitcoin, building on Bitcoin, a trend that we've seen for the last 1.5 years. And it's a really exciting trend on building on Bitcoin. And yeah, today we will talk about, I hope you will learn a lot about Bitcoin L2s, ordinals, lightnings. We'll talk about Bitcoin moderates versus the maxes. And yeah, exciting panel ahead. I'm Jérôme Bailly, the Vice President of the Crypto Valley Association, also doing business development at Adnovum. And I have great panelists with me tonight. I have Rena Shah, Kevin Hurley, and Dan Hell. So please introduce yourself and give us also a few words on how did you come into Bitcoin. Maybe we can start with you, Rena.
Hi everyone, my name is Rena Shah. I work at Trust Machines. We are a company building products on Bitcoin, both the L1 and L2. Previously was an early exec at Binance. My crypto journey is a little bit different. I'm from the oil industry, and so I learned about Bitcoin straight off an oil rig offshore in the middle of the Gulf of Mexico.
Yeah. Yesterday we talked about the link between oil and Bitcoin mining.
You know what? One commodity, another commodity,
Yeah.
same.
Excellent. Kevin?
I'm Kevin. I'm the CTO at Lightspark. My Bitcoin journey was a little bit of a winding journey, so I have been in finance for quite a while now, and I worked at Libra DM at Meta. We actually originally looked at potentially using Bitcoin for that project and didn't feel like it had what we needed at the time because Lightning wasn't really mature enough. So took a path there to try to get something that we could use at Facebook and didn't work out. So then we ended up spinning out and forming Lightspark with a similar mission in mind.
Thank you. Dan?
And I'm Dan Held. In my corporate career, I used to lead marketing at Kraken, one of the earliest product managers in the space as well, like blockchain.com back in 2013. And in parallel to that, I've also got around 800,000 followers on Twitter, where I tweet about Bitcoin DeFi, and we've both Rena and I have been looking at the Bitcoin DeFi space for quite some time. So
It's about damn time.
yeah, I know. Yeah. So it's Bitcoin DeFi to me, I think, is a really exciting kind of new era for Bitcoin.
Okay, thanks. So you could hear from the accent, or the three panelists are coming from the US for this conference. So thanks for joining. Maybe it means that something is happening maybe more in the US. We had that discussion with you, Rena, yesterday. Do you think the heart of the new trend is from the US, or is just a chance that you are all coming from the US for that reason?
I fundamentally believe Bitcoin innovation started in America. We've always been Bitcoin first. It's freedom money, privacy movement. It appeals to all of our American values. And there's a reason why a number of us continue to build on Bitcoin, even though people have moved on to other chains and such. But Bitcoin really appeals to the American ideal.
All right. So let's set up the scene, and first, I will let you pick a definition of the new trend. So we've called it season 2 of Bitcoin. Why not about calling Bitcoin Renaissance or Bitcoin Second Civil War? What do you prefer, then?
All of the above. I mean, they all somewhat describe what's going on. It is a renaissance. This is a new wave, a new moment where innovation and much more growth is happening on Bitcoin in terms of development than any time before. It's also a civil war because in a way there are conflicting ideals with some, I would say, largely Puritan minority group where they fundamentally don't understand Bitcoin, and they're part of the latest kind of Bitcoin maxi wave where they believe that Bitcoin solves moral issues, that Bitcoin solves things, that fiat money is the cause of divorce and bad nutrition and things like that, which I think is a little bit absurd. Certainly fiat money does change the world in a negative way, but I don't think it has such far-reaching consequences that it influences everything, a moral part of society. So that Puritan group believes that anything on Bitcoin dirties the Bitcoin blockchain. NFTs are dirty and not art, which is kind of funny because all art is subjective. Like, I'm not saying that NFTs are an amazing piece of art, but certainly if someone wants to buy it, that's not an immoral activity. So Civil War-wise, yeah, there's a split, I would say, between the moderate Bitcoiners who want to go build on top of Bitcoin and this very newly emergent Bitcoin Puritan group, which only started back in 2019, 2020 with the book, The Bitcoin Standard by Saifedean, where he demonizes things like art and things that he subjectively doesn't like and labels that as fiat. So that's kind of the difference between the two groups. So yes, all of the above. It's a civil war, it's a revolution, it's a renaissance, all of the above. Yeah.
And when did it really start? I've said maybe one and a half year ago with the ordinals, but can we include Lightnings as the OJ of season 2, or how do you see Lightnings connected with this new wave?
So I think Lightning still fits in with kind of the season 1, if you want to call it that. And I think if you really want to define season 1, it's kind of figuring out what the product market fit was for Bitcoin at the time. And I think that kind of ended up coming down to being able to have an investment asset. And there's still a subset of people that treat Bitcoin purely as an investment asset. And I was recently talking to a big wallet developer who mentioned that they typically see a lot of people use Bitcoin-only wallets, and they use it as an investment, and then they have their wallet for everything else. So for all the other coins, they use this alternative wallet. And they treat Bitcoin as a completely separate thing. And that's kind of the thesis of Bitcoin Season 1, I guess, is that it was an investment asset where you're actually able to save and hold money for a long term, and these other chains are used for other things. And that's kind of bled into now Season 2 as well, where you see people that want to keep Bitcoin as this pure asset, where you don't have NFTs, you don't have any of the shit coins or anything, where people feel like that is kind of polluting the purity of Bitcoin. And I think Lightning still fits in with the original ethos of you're able to transfer money, you're able to save money, it just helps scale Bitcoin a little bit more. Whereas kind of the things in Season 2 are things that are maybe less pure and go against what a lot of the OGs kind of feel is something that is they don't want polluting Bitcoin.
I would push back a little bit on that because I'm part of the oldest OG cohort from the 2011 through 2014 era. That group was actually very open-minded with things. For example, NFTs started on Bitcoin, started with Counterparty. Ethereum popularized them, and then they came back to Bitcoin later with ordinals, rare Pepes. And so the original, the oldest cohort of Bitcoiners were actually pretty open-minded. I mean, Charlie Lee loves Bitcoin, but he created Litecoin just for fun. And then you have, for example, the narrative back then was, let's let the shitcoins go experiment, and then we'll take whatever code or whatever insights that developed over there, in that test net, and bring that back to Bitcoin. So I would say the earliest cohort of OGs is very open-minded with it when it comes to building on top of Bitcoin. But yeah, certainly there are members of that, of course, that don't like NFTs and everything else. So I wouldn't completely disagree, but I think the original cohort of Bitcoiners are pretty open-minded about building.
Even in the 2011 Satoshi chats, Satoshi had always thought, what if you recycled Bitcoin security and build layers on top? He had seen this vision from the beginning, but didn't have quite frankly, the crowd's support to continue on this path, and Season 2 has reactivated it.
I've tried to define the transition or the evolution from monetary to expressivity of Bitcoin, and let me know if you agree. So does this Bitcoin transaction have extra data beyond BTC transfer, or does it not? And extra data would mean non-monetary and arbitrary data. And would it be a good overall definition, and what would you add to that?
I think arbitrary is a little bit demeaning. When you say it that way, it sounds silly or something. So if Bitcoin was ever going to be the global reserve asset of the world, it was going to have to interact with other assets eventually. People also forget that Tether started on Bitcoin using Omni. So Tether started on Bitcoin and was being transferred on Bitcoin until fees got too high, and that's where Tether is now transferred primarily on other chains. Things like Tether or the stablecoin assets, you could then, with smart contracts, you could borrow dollars using your Bitcoin as collateral and unlock what we've seen over on Ethereum and Solana, unlock this much bigger digital circular economy. The circular economy that Bitcoiners have been looking for, some of the newer Bitcoiners think that it's with payments. Spend coffee on things, you go buy a hamburger at a restaurant, but we've seen over 12 years that not many people want to do that. But what they do want to do is they want to participate and speculate in a digital circular economy, which is as evidenced by Solana and Ethereum and other smart contract platforms. So the circular economy we were looking for wasn't physical, it was digital. And I think success for Bitcoin is this arbitrary, as you put it, arbitrary data on the Bitcoin blockchain, because this represents Bitcoin being financialized and becoming the pristine piece of collateral for becoming the world's next new world reserve currency.
Yeah. Maybe let's start talking about L2s, Bitcoin L2. So what's the most exciting L2s or tech of the L2s that you think, Rena, are happening right now?
I'm a little biased because I'm a core developer for Stacks, a Bitcoin L2, but when I think about L2s, all I'm looking for is cheaper, faster, better. That's it. You can debate the technical warrants of what consensus mechanism you use, what bridging mechanics or anything, or what language, but cheaper, faster, better. If your transaction fees are not cheaper, what is the point? Because Bitcoin is sometimes too expensive to use in the L1. Faster, if you're not giving me Solana or better speed, not a chance in hell that I'm going to use it. And then better is probably the most subjective, but when I'm looking at an L2, can I deploy my BTC capital into DeFi? Can I build smart contracts? Can I meme on it? Can I do more with my Bitcoin to move from passive asset to productive asset? That to me defines a true L2 more so than anything else. With Stacks, we're a growing community of builders trying to financialize Bitcoin in a way that any chain can actually deploy BTC capital, but there are others still contributing as well.
So I'm obviously biased as well because we're building on Lightning, so I would say Lightning is the one, but I think there's a lot of interesting things that are coming out now. So if you look at some of the things with BitVM and some of the proposed things with new opcodes, there's a lot that you can potentially do with less trust. I think that there are certain folks that won't be as comfortable with what are effectively federated sidechains, but there are ways to potentially make those into something that is more trustless when you're able to add new opcodes that can do new things. And I think that once you get to that point, then there becomes a lot more that is actually open to development that you can actually do in a more secure way, and I think that starts to open the door.
Let's double click on BitVM. I heard BitVM, so that's in the buzzword I hear all the time, and I read all the time on Twitter. So what is BitVM, and is it only theoretical? Is it exist? Dan, what do you say?
Yeah, well, I was going to say too on the L2 front, I'm a let all the flowers bloom sort of vibe. Stacks, Lightning, all incredibly important L2s. There's a lot more coming out. And to Kevin's point, I think a lot of these do resemble more of a federated multi-sig model, essentially a large multi-sig, which isn't the best game theoretic security you could have, but with OPCAT and other opcodes, we could potentially have trustless bridging, and these L2s would look more like a true L2. So I want to say that there's a lot of L2s coming out there. I think there's going to be a lot of excitement around building with these different L2s. With BitVM, from my understanding, again, I think this is a better question probably for Kevin. But BitVM, I think, is more theoretical at the moment. It is not in production. It's not live. BitVM essentially is how can you enable like trustless bridging on top of Bitcoin? And BitVM is an architecture that I believe is currently just theoretical. I think there's the fraud proofs and other things in order to secure the BitVM, I believe, are extremely large. And so that's why it's theoretical. But I'd punt this over to Kevin. I think technically he probably knows a bit more.
So when you look at BitVM, its goal is to make Turing completeness on Bitcoin. And the way it does that is it breaks down any program into core NAND gates that you can then use to build out the program. You kind of put those into the tap leaves, and then you execute it off-chain. Whenever there's a dispute on what actually the result of it was, you effectively bisect the program and try to find where the executor was incorrect. If you're able to do that, you can claim the funds. It's pretty theoretical at this point. There's a lot of work going on to implement small sub-programs you can use to then build into larger programs, because you don't actually want just NAND gates. You want it to be portions that are larger so that you don't actually have to completely go from scratch on each program that you're building, and you actually can do it more efficiently. Now, the latest proposals I've seen aren't really that great, honestly. There's a lot that still needs to be built on it. So if you look at the core way that it works, you have, let's say, 100 entities that are able to be the core entities that are part of the BitVM bridge or rollup. Those are the only ones that can actually challenge for if something is going wrong. They additionally need to have a lot of liquidity to be able to pay out for people that want to withdraw from the bridge, for example. So they have like a 6-month window where the bridge operator can get their money back afterwards if there's no challenges. So they have to have additional liquidity to actually pay out people that want to withdraw. So if you have a run on the bank, you're going to have a hard time. They're probably going to fall back to the next person that can be an operator until eventually it falls into a one of one. In theory, if you have one honest operator, you're good, but not really in practice, because you have a run on the bank. You need a ton of liquidity to be able to pay that. And then even if you're honest, you might get fall back to the next person. So there's still a lot of work to go on it. It has a lot of promise. I think it's maybe been overhyped in some ways so far, but there is a lot of promise, and some interesting things you can potentially do with it.
I think a lot of L2s actually want to implement BitVM to bring themselves from trust minimized to trustless. Like, we're all very bullish about it, but it's a long ways out.
And you developed stacks a long time ago before BitVM, so it's also possible to do it that way.
Yeah, the Stacks consensus mechanism recycles proof of work. We would like to upgrade our security from being minimized to trustless. We're not there. We see BitVM as a potential solution.
Okay, so let's talk about yield now. How can we make Bitcoin productive? Staking, restaking, also interesting things to think about, Dan?
Yeah, I mean, as Juthika Chow puts it, she's a former derivatives trader from Goldman Sachs, built out LedgerX, the first options exchange for Bitcoin, and she used to lead Kraken's OTC derivatives desk. As she puts it, yield is the monetization of tail risk, which I thought puts it in a pretty succinct, eloquent way. So whenever you see yield, there's always some risk, or there's a reason why you're receiving yield. I think I want to highlight that first and foremost, because a lot of people think yield is like free. It comes with risk, either protocol risk or counterparty risk. So yield on top of Bitcoin, Bitcoin, like I mentioned before, is a pristine asset. In crypto, Bitcoin is unanimously the #1 asset to be held. Its market cap is larger than everything else combined. It's most liquid, and it's the most trustworthy asset in the space in terms of decentralization and the future of the asset. So would people want to use it as collateral or use it for smart contracts? I think absolutely. And some of that will include getting native yield from Bitcoin. Native is a weird way to put it, but you're in a yield from Bitcoin. So one, for example, you've got protocols like, what's the David C's thing? Babylon Chain, where you can stake Bitcoin as collateral for a proof of stake chain. So Bitcoin can be used to secure a proof of stake network. Same with Botanix. Botanix is a Bitcoin L2 that is essentially you're on chain, you're locking up your Bitcoin, and that's being used as collateral to represent your stake in this L2, and you can earn a yield from the activities on that L2 or from the activities from staking or providing Bitcoin as stake for another chain. There's lots of other ways to earn yield as well. There's actually currently there's some ways to earn yield on Bitcoin that exist on the Bitcoin protocol. You've got join market, where if you provide liquidity for coin joins, which are ways to that's a way to mix your coins, you can receive a yield for providing liquidity for someone else to mix their coins or tumble their coins with you. So that exists with Bitcoin today. So there actually have been some kind of more primitive smart contracts that allow you to earn a yield with your Bitcoin. But yeah, this topic, we could talk about hundreds of ways to earn yield, but I'll kick it over to these two.
I'm pretty excited about the idea of having an eigenlayer for Bitcoin. Bitcoin is the most secure asset to be restaked or reused in a way to use for other consensus mechanisms. And some of the early work we're doing at Trust Machines is to build out that style of protocol that any form of Bitcoin, whether it's Bitcoin on the L1 or Bitcoin from Cosmos or WBTC or such, can all be reallocated to increase the security model of other Bitcoin L2s. It hasn't been done before. Eigenlayer is kind of the first approach on the EVM world, but it makes sense to use the most liquid and most durable chain that exists. Other things that should exist on Bitcoin that have yet to exist is basic lending markets. You should be able to do Bitcoin borrowing and lending in a way on-chain where you did not get wrecked by BlockFi or Celsius. That should not ever be a black box, and I'm pretty bullish about the opportunity of I can deposit my Bitcoin, I can take a loan against it, I should never get liquidated if I manage my positions accordingly. Not a taxable event for Americans, which is critical for us, but the idea of my home mortgage or anything like that should be within my Bitcoin collateral, hopefully a stablecoin. I'd love to take it out against a Bitcoin-based stablecoin, perhaps on Lightning, that would be great. But these are the things of the primitives of where yield could be generated that does not exist.
Bitcoin-based stablecoin on Lightning? You just say that. Is that
I would love to see
is that
one
something
personally.
you think about?
Yeah, so there are a few proposals out there for that. There's Taproot Assets, there is RGB, there's LRC20, there's I think a few others, but I think that it's coming. I don't know how soon, but I think that it's definitely coming. The code for a lot of these is still being put out, so it's a bit of a work in progress, but it's almost there. I think there's almost no question that it's going to be coming where you'll have stablecoins on L1 and on Lightning. I think there will probably be yield-producing stablecoins as well. So a lot of what we're talking about today is going to be possible in the very near future.
How much the Bitcoin community get inspired by Ethereum? Because I hear a lot of terms and technology that directly comes from Ethereum. So are they copying or improving? Is there anything to add on that?
I think the way Dan phrased it earlier was really good, that Bitcoin kind of took the approach of use these other chains as the testing ground. And the things that worked well, Bitcoin will take. The things that don't work well, Bitcoin won't take. Now that being said, there's a lot of work on Bitcoin to actually be able to use some of these things with new opcodes potentially to enable these. But I think that the developers on Bitcoin have generally seen, well, rollups are working sort of on Ethereum. Potentially we need to bring those over to Bitcoin. These other things potentially we want to bring over to Bitcoin. And I think as things start to look like they're working well, then potentially they'll be added to Bitcoin as well. But there's a long ways to go to add a lot of these things.
I'd say Bitcoin is catching up pretty drastically to Ethereum or Solana. Just last month, Bitcoin hit 1 billion transactions. Ethereum hit 1 billion transactions in 21. Solana hit 1 billion transactions in 22. And we're finally creating the right environment that people want to transact on-chain with Bitcoin, which did not exist.
And I'll throw out a controversial opinion here, but maybe Ethereum was just a testnet for Bitcoin.
100%. I mean, Bitcoin was used to pay for the Ethereum ICO.
I'll throw out a stat here that most of you probably don't know, but there is more trading volume in Bitcoin NFTs than Ethereum NFTs after 1 year.
And Solana NFTs.
And Solana NFTs, and this is on 1 year in a bear market and with really shitty wallets. Like there's only a couple wallets that support ordinals for Bitcoin. Like Ledger doesn't support it. A bunch of the top like hardware wallets don't support it. Again, Bitcoin NFT trading volume is larger than Ethereum after 1 year. with limited wallet support in a bear.
Because it's luxury.
It's luxury, and also like this is proof though that people often wondered, would people want to do DeFi activities on top of Bitcoin if it was available? Maybe Bitcoiners who hold their Bitcoin don't want to use it for speculative purposes. They indeed do, and that's what we saw with ordinals. So, some people, most people in this room probably didn't know that, and this is like the #1 shocking stat that I share where people's minds are kind of blown. That's just the beginning. It's only been 1 year with ordinals, and we're just getting started. So, will Bitcoin become, absorb a lot of the DeFi market share? I think it is entirely predictable that it will. And we're seeing that already happen. We're not talking about what will happen. It has already happened. And so we're just going to see that momentum continue to grow.
And maybe let's talk about VC investment. You talked about Babylon. Last week they announced 70 million fundraising. So yeah, we see every week now announcement of VCs investing in Bitcoin L2s or Season 2. Rena, you told me that there are some VC only specialized on Bitcoin L2s now in the US.
I mean, I think Dan's a good example of a VC that's only Bitcoin.
Only Bitcoin DeFi, not even Bitcoin centralized companies. So we wouldn't invest in brokerages or exchanges or anything like that. We only invest in Bitcoin DeFi, which would be L2s, Dapps, and meta protocols. We're the only pure play fund in the space that focuses only on Bitcoin DeFi. There are others as well, like UTXO Management from Bitcoin Magazine. They sort of pioneered investing in the category, and a few of the Asian VCs as well. Some of the Asian VCs are a little bit suspicious, though. I just spent 2 weeks in Hong Kong here about a month ago. Rena was out there too. A lot of Chinese VCs, what they do is they rebrand themselves. They create a new name, and they get new names from the GPs. They'll also scrub their old investments and just have the investments that did well. So there are several kind of like Asian Bitcoin VCs. However, they weren't before. They changed their name and identities and scrubbed their old investments. So I'm not sure if you can call that pure play or not, but there are Bitcoin DeFi VCs in Asia as well.
I think it's to the point that every VC has to have a Bitcoin thesis, whether they had one from 10 years ago or they have one now. It's about time to have one because there is going to be no asset that ever compares to Bitcoin at the end of day.
And it's really evolving now that you see what we're calling Season 2 happening. There's a lot more development and platformization of things on Bitcoin. And I think as the VCs see that, they see great opportunities to invest because you obviously want to be on the best chain that you can be, and Bitcoin is that chain. So as the opportunities open up to invest and they start to see more things being built, it's an exciting world to be in.
And I think to Rena's point as well, when I first started cutting angel checks in the Bitcoin DeFi category, and then in January started to paper up my fund, this was a very controversial opinion to have. Bitcoin DeFi was not sexy. It was the opposite of that. People were like, that's impossible. I don't believe that's ever going to be a thing.
Now it's glamorous.
Now it's glamorous, yeah. So in February at Satoshi Roundtable, the outcome of that, all the talking between crypto executives, that was the Schelling point that changed the trajectory of Bitcoin DeFi. The week after that, that's when Bitcoin L2s, that narrative became hot. Traditionally, like in the Bitcoin DeFi category, you had very few investors. You had, after the Bitcoin L2 excitement in February, you had Pantera, you had all the large crypto VCs all start to make their Bitcoin DeFi play. That's huge. They have most of the money in this space. And them allocating, I think, is a strong signal to the market that something's real here. What's really interesting and also kind of sad about the Bitcoin DeFi Season 2 is that the first wave of Bitcoin VCs, almost none of them have invested in Season 2. And they will likely lose out on the largest capital, like the largest amount of capital appreciation ever to occur in crypto due to dogmatism around their purity. So it's really interesting. It's very sad as well that the original Bitcoin VCs will miss out on this. Also, the really big VCs, they're just now putting their toes in the water, but they'll probably, YOLO in here in about 6 to 12 months when the market gets super hot.
That's a great opportunity to do a Bitcoin DAO and crowdfund.
There we go. Yeah, it's funny with seeing Bitcoin DeFi emerge as a category because Bitcoin maxis hate it and Ethereum maxis hate it. So it's like this, it's hated from both worlds, and I love trades like that because if you looked at it like Rena and I have for years, and and Kevin,
sure.
you see real things happening, and all you ever had to do is just look at the blockchain. Just look at what's happening on the blockchain, go and meet with developers, see what they're building. And so it was one of the easiest trades I've ever seen in my life, where it's all you have to do is pay attention.
I love that Dan brings up developers because this is the first time from the recent Electric Capital report that we've had more Bitcoin developers, whether L1 or L2, than maybe the 2010 era. And when you think about developers, they don't really care about what they're building so long as they believe in it and have kind of a sense of conviction that this is going to take off. A lot of Bitcoin L2s basically get into this argument, token, no token, and people kind of shy away. But this current market of developers are building real products, building Dapps on Bitcoin, coming back to it from the mindset of Bitcoin was my first asset I ever bought. I ignored it for a decade, and now I'm coming back to build with it. And that transaction activity and that developer increased activity is really showing the market of this is why you need to invest back in.
All right, so for the last few minutes, well, what's next? So what are you excited about? Maybe some new technology that we can inherit from other blockchain, or what's exciting for you? For that, maybe last word.
I mean, something like ZK rollups would be really interesting. I think it's probably quite a ways away, but I think something like that that helps scale Bitcoin with privacy would be quite interesting. I think that adding OpsCTV, APO, anything like that would be really cool, but I'm guessing that both those are still a ways away. There still seems to be a lot of contention on really any covenant proposal because there's so many options. So I think there's a lot that's potentially really interesting, but a lot that still is under active discussion and will take a while before it to actually happen.
I think for me, a couple things. One is bringing back more privacy on chain. So I would love to see a Bitcoin tumbler come back again. I think you should fundamentally have the right to use your Bitcoin in a way that maintains privacy. And it's a challenge in America, but I would love to see bring back privacy to Bitcoin. That's something I'm pretty bullish about. And then the new crop of consumer-facing apps. More and more people are realizing that Bitcoin is more than just an asset, but actually to use the chain. Ordinals to me really stood out because it's the first kind of instance that you can treat the Bitcoin blockchain as your AWS or your iCloud or whatever it may be, because you can have file storage. And so long as you run your node, it will continue to exist and no one can take that away from you. And so I believe that there will be more and more dApps kind of built with that mindset.
I mean, Bitcoin DeFi here is going to be the biggest opportunity ever in crypto. Bitcoin is larger than everything else combined. If people use that available capital to go speculate on other assets like NFTs or other tokens, that market's going to be absolutely massive. So I think a lot of people are sleeping on this, and for me, I woke up a couple of years ago and I was like, this is going to be a big thing. So I can't stress enough that you should at least just take a look at it, go explore, take a look at it, start to play around with it, go interact with some of these ordinals and whatnot and check out how these protocols work. It's interesting, so it's worth your time to check it out. I think something that we didn't really explore in this conversation, but I do find it interesting. So, ordinals represents ordering theory. So it's the idea that we all wear. When we look at the Bitcoin blockchain, we're all wearing the same augmented reality glasses with our own software, and that's basically the ordinal software. It's our own subjective interpretation of activity happening on Bitcoin, and we then create this new layer on top of Bitcoin that we subjectively believe in. I like to call these meta protocols. So basically, with ordinals, you have, for example, like BRC20, Runes. You probably heard about Runes. That was an exciting new meta protocol developed. I think there's a lot more exploration to be had there. So I think the meta protocol surface area, or not in L2, but essentially if we look at Bitcoin activity in L1 and add new values to that, I think that design space is very underexplored. So meta protocols, I think, will be a bigger part of the conversation over the next couple of years.
All right, thank you. So we have a few more minutes for a question from the audience, if you have some. I see, yeah.
Hi, Ralph from Woodhouse. We're building on the Lightning as well, startup. So highly excited to have you here with us and giving your useful insights. Question towards Lightning Network: there's a lot of critique out there because of the complicated UX in
I mean, it is too complex. When we started Lightspark, we went around and talked to a bunch of exchanges and other companies that either hadn't implemented Lightning or had gone away from it, and there was a very common refrain that it was too complex, and that was a big part of why they didn't want to do it or why they hadn't done it. They needed teams full-time to manage that. The concepts of it are vastly different than any other L2 or L1, so it is hard to actually reason about and figure out how to work well. That's where at Lightspark we're trying to come in. We're trying to make it so that it's like a Stripe-like interface where it's just a few lines of code, you're able to get it up and running, you have it work well, you don't have to worry about anything under the hood, you don't worry about inbound liquidity, you don't worry about channels, anything like that. We abstract all that away, but I think that there's a lot more that needs to happen on Lightning to make it more intuitive and to make it into something that companies can easily integrate with and build on. I mean, I think we're trending in the right direction. There's a lot more work to do, but I think we're trending in the right direction.
All right. Last question, maybe. Yes, no? All right. So thank you very much for the panel, and see you next time.